Hello and welcome to Full Tech Ahead. I'm your host, Amanda Rosani, and I'm excited to be here today with Arthur Firstov. He is the Chief Business Officer of Mercuryo. How are you doing?
Thanks, Amanda. Not too bad.
Well, can you share a little bit about yourself and then Mercuryo? What services do you provide?
Sure. I'm Arthur. I'm Chief Business Officer at Mercuryo. Started pretty much from the beginning in 2019. Mercuryo is think about this as a payments 2.0. It's the payment network for crypto platforms. We help people to on-ramp and off-ramp money into the crypto platforms and also like basically move money all around the world in decentralized space.
Great. Okay, so you're the person to talk to when it comes to cryptocurrency and payments, which is our topic today.
Yep.
All right, so let's talk about the evolution of crypto payments. You've witnessed some major shifts in the crypto space, I imagine, since it began. What would you say are the biggest changes in how people use crypto for everyday payments today versus back in the beginning?
Yeah, I think I've started to look at this space like in 2017, 2018, and I used to work in the private banking space as well. So I kind of like been familiar with the payments landscape and globally. And obviously, with e-commerce, you might think about Stripe or other payment companies that disrupted this space like early on and allow people to basically enable business payments into their platforms and operate globally from the next day. I think payments back then was like kind of like developed pretty much in Web 2 space, but in Web 3 was like really something new. And crypto and payments, I think it was like probably very few use cases, like buying cryptocurrency and holding it, right? So it's kind of like I would say utility wise, it wasn't the best kind of like exposure of the infrastructure. And right now, what we've seen, even for this year, for 2025, stable coins payments, they grew up like up to almost 100 billions. If I'm not mistaken, like that was the last report that I saw like on the stable coin network by Artemis. So yeah, I think right now we see more utility, more like usability of the payment networks and the stable coins specifically. So you see use cases like remittances, different money transfers, settlements between different financial institutions, and also obviously retail payments flow, which has always been big, and people buying and selling crypto, moving money into stable coins and sending this money to their families and friends.
So more people are actually able to buy and sell with cryptocurrency. Are there e-commerce sites, for example, that are taking crypto as a form of payment for products?
Yeah, I think Shopify announced that last year together with Solana. They launched the USDC together with Solana and Circle as a payment rails basically, so people can buy goods and services with the stable coins. And I believe this shift will be dramatically moving forward, like and happening like soon, especially in the United States with a new regulational environment and frameworks. So I see like many companies are issuing their stable coins, and many, I would say, traditional banking and financial institutions also will be doing the payments settlements in stable coins and allowing their customers, merchants, and different e-commerce stores basically to accept digital assets, specifically stable coins.
Great. So you mentioned Web3 and the major shift there. How do you see the bridge between Web3 platforms and traditional finance evolving? And what challenges remain to make that seamless?
Yeah, honestly, like when we started, the main challenge was regulation, and very few companies had the license and ability to transfer money between fiat bank accounts and digital assets, crypto platforms, exchanges, custody platforms as well. So I think right now it became like much more easier, and I would say even like commoditized in some sense because so many companies started to do on-ramps, off-ramps, different exchange and custody services in comparison like to like 5, 6 years ago. So like the challenge probably is going to be right now is the fragmentation of this ecosystem where all of the different crypto platforms or traditional players establishing their own rails, and it's like kind of it's great because the space is growing and the pie is so big because, like so many payments use cases you can imagine. But at the same time, for customers, for consumers, I would say it's going to be like UX. and it's going to be like domestic fragmentation based on their like geographical, preferences, which, banking providers, which bank applications, neobanks, or payment systems and payment schemes they use in their region and their countries. And, for example, a lot of people travel, a lot of people have families abroad in different other countries. For example, I have a lot of friends in Europe, and some of their families live in other countries in the US or in Southeast Asia. So it's kind of like UX, I would say, is the main challenge. And maybe also like like fragmentation of the crypto ecosystem in general, because you have different blockchains, L1s, L2s, stablecoin foundations. So you need to really have like holistic platform which unites all of these payment networks and also like blockchain infrastructure providers under one roof. But yeah, it's going to be probably interesting to see who's going to be a winner.
Absolutely. Well, Mercuryo supports over 11 million users and partners, I believe, with leading names like MetaMask and Ledger. What are some of the key lessons that you've learned about building scalable, compliant global payment infrastructure for crypto?
I think this is a great question, like what we learned. Because we got done like a lot of things with the partnerships, but over the course of like last years, we learned that like all of the partners, they also like have like really competitive environment. So like there are a lot of wallets and they're competing for the same users. They providing different crypto services. So we learned that we need to like be more agile and kind of like agnostic in a way that like we think about our roadmap. And as you mentioned, like we have a lot of users. I guess it's like around 12 million on a monthly basis right now using Mercuryo on ramps of ramps. So we're trying to enable our partners and obviously the users of this ecosystem with kind of like interoperable experience where they can move money between different wallets, use different crypto platforms for different needs, for DeFi, for remittances, for like yield, or for just storing their money in these wallets. But at the same time, being able to access like the best fintech and banking experiences that they used to probably have with their traditional banks. So I'm kind of like enabling supplementary products, new use cases, and trying to be close as possible with our partners. So visit different, meetups, organize workshops together, attend hackathons, also like see what's new happening in the, developer space in general, because you never know like who's going to be the next unicorn and capture like next millions of users. So I would say that's our main focus right now, to optimize our roadmap around product and around like I would say product partnerships with our main consumer venues, like in general consumer venues in crypto, and also support growing development ecosystem in crypto, and help like new startups to establish their payment rails and build the new financial applications, basically.
Well, let's go back. Earlier, you mentioned regulations, and I know the regulations regularly change. What advice do you have, or what are your methods for staying on top of compliance and also, making sure that there's trust there?
Yeah, I think our main goal with regulation right now is just to stay ahead of evolving like requirements. And right now we see like much more, established frameworks in different regions. And obviously we obtain all the necessary license, staying compliant and fully regulated in this world allows us to establish new payment rails, open new products for our customers. So I would say that's currently not a barrier, but it's kind of like more innovational, I would say, advantage, where you have like unified standards, like in Europe, for example, with MiCA compliance, or in other countries, you have like similar frameworks being passed right now, and a lot of companies trying to be regulated, even the ones that been like decentralized and fully, I would say, permissionless. And it's been a wild west in crypto, especially like when DeFi summer happened in 2021. So now we see that all of these companies, they're moving into compliance space, especially to enable use cases with institutions, like a lot of institutional demand for DeFi, for overall like stable coin use cases, yield. And in order to solve this, huge demand, I would say, which is much bigger than crypto space in general, you have to be compliant. You have to like make sure that all of your services provided in this compliant way in all of the regions you want to support your partners.
Absolutely. Well, I think you are attending Token Singapore soon, or did that already happen? Is it
Oh,
coming
it
up or did
happened in September. Yeah, it
Okay,
was a big one.
so tell me about that. What developments or conversations did you hear at that event that were interesting to you? Were there any trends that you see coming soon, or anything dominating Web3 or blockchain discussions this year?
Yeah, I think the overall experience that's been like our probably third or fourth Token 2049 for the last 3 years. And we definitely see the space and focus like changing towards like a real world infrastructure, stablecoin payments and compliance use cases. So everything around institutional adoption basically is really big topics right now. And I think in comparison to the last year's like other token and other conferences we attended last year's, you can see that shift from speculation towards utility happening like across not only payments but all of the other crypto use cases. For example, trading or savings or custody. So all of these things right now like really moving super fast. And you can see like huge institutions like the biggest banks in the world, like asset managers, venture capital firms, family offices, they're on like establishing their own like rails or partnering with the crypto platforms or like setting up like I would say their in-house crypto powerhouse just by acquiring talent acquiring companies. So I would say for us Token 2049 was definitely a blast in terms of like a stable coin utilities. We have like a lot of customers in Southeast Asia in general, and Singapore became a hub where we can connect with all of them and basically rediscover what are the new demand and what are the new like requirements for us to be able to work with them. And yeah, I think Token 2049 is one of the best places to attend to learn that and also to see what other peers are doing in the space, especially in this kind of like fragmented ecosystem where you have like every single blockchain, every single company as a like a different city, different country with own culture, with own like mentality, with own philosophy and vision. So I think for us it's going to be really interesting to see how it's going to be evolving in by the end of this year. But obviously looking forward to the next year to see what other developments we're going to come up with as a space.
So, looking back when cryptocurrency first came on the scene many years ago, there were plenty of people that thought it would fizzle out, it wouldn't last or be very viable. And here we are still talking about it, all these big companies and banks. So, what advice do you have? And I know you're not a financial advisor, but just your own opinion. If somebody is looking and saying, wow, cryptocurrency might actually be legitimate, we'd like to get some, but how are they too late? In other words, how viable is it to think about buying into cryptocurrency at this point?
Oh, that's a tough question. I would say like looking at the car market, you would say like it's not really sustainable because of the volatility and the overall like spikes and like kind of unexpected dumps happening in the crypto. It's kind of like something that we used to as like being into I don't know, like for the last 3 4 years, we saw like 2 years of the bear market, and then it was like a bull market again. So I think trading use cases, I think it's like 70% of overall crypto volume, like perpetual trading specifically. A lot of hedge funds, liquid funds, and prop trading firms, big like VCs that have their own trading arms, they trade like regardless of the market conditions. So I think for retail customers, it's a little bit like more complicated. And if you're not unsophisticated player in this space, it will be harder for you to know like what to buy and what to support basically. I think it also depends on local offerings. For example, in Europe, we have our partner Revolut that offers right now like a digital asset support, and every single Revolut user, it's kind of like the biggest neobank in Europe. I guess every single European resident has like a bank account there. They can now buy like digital assets and move money in and out from their bank accounts. In the US, I think a lot of companies, a lot of banking institutions going to do the same. And there is like big topic around that, how it's going to be moving, especially with like BlackRock, for example, ETFs and DATs that will enable like people that never bought cryptocurrency, never, like traded on the centralized or decentralized exchange, and never touched crypto in general. They can basically have exposure into assets like Bitcoin or Ethereum through ETFs. And also Solana, I believe they announced this recently last week as well with Bitwise. Like I think it's getting like more easier, I guess, for broader audience to acquire assets or acquire rights to hold these assets through ETFs or other financial instruments. So which is good. And also like financial rails allow that to basically do it smoothly without like any, risky third parties or I don't know, OTC where you don't know where you're buying, like who is the seller, which wallet this crypto is coming from. Is it like a flagged wallet or is like, something illegal? I think this is still like big question for people, like if crypto is like, legitimate space and, great investments to do. But I guess like currently institutional adoption allows people to rethink what is crypto and kind of like align it with I don't know, traditional stocks and other assets class, so that they used to already. So I guess like it's becoming more like financial instrument, and it's going to be similar that we see in TradeFi, like TradeFi in general, how it's evolving. Yeah.
Okay, great. Well, thanks for sharing your opinion on that. So moving forward, how do you envision the future of digital banking and payments?
I think every fintech will be stablecoin company. I think every payment company will be stablecoin company as well. And specifically B2B like companies that are providing like services for entrepreneurs, for startups, allowing them to open a bank accounts, allowing them to move in money in and out, manage treasuries, establish also self-custodial infrastructure for their customers. It's going to be really soon. I think this year and next year, we will see like a lot of new announcements and developments in this space where traditional companies, opening self-custodial wallets for their customers, and these customers basically becoming a part of this overall like yield chain, I would say, where, for example, right now, like traditional businesses and startups, they used to store their treasuries on normal bank accounts. And if they have access to financial instruments like T-bills, for example, they can earn yield on that treasury. And this is what companies are doing here in the US, for example. But in other countries, like I guess the exposure to different financial instruments less present. And the way to do that right now is basically to establish fully regulated compliant framework for businesses to open kind of like a stablecoin accounts, which will allow them to do payrolls, like move money in and out, do settlements between their partners, but also earn yield on their treasuries, similar way that they can do, for example, with the banks or with other financial institutions. So it's going to be kind of this shift, and it's already happening. There are a lot of investments in this space. I guess it's one of the fastest growing vertical in general in crypto and in fintech. Like corporate companies, payroll companies that are fully stablecoin right now, and it seems like the same. Actually, UX and UI for companies didn't really change much. But underlying, infrastructure is a stablecoin network, self-custodial accounts, and also like yield, decentralized, basically yield pools where people can safely and fully compliant way store their money and earn yield and basically operate globally without barriers and without like long delays on the transfers and the high fees. So this industry is going to be really disrupted. The fees going to be close to zero, and it's going to be golden era for all of the entrepreneurs and the startups that usually used to struggle basically with opening bank accounts, receiving like their first investments, or paying like salaries to their employees that live somewhere in other countries.
Awesome. It will be interesting to pay attention to. Well, if there was one key takeaway you could leave our audience with today, what would that be?
Um, I would say depends on the audience who is listening to that, but there's a big change in definitely in fintech and payments world, and everyone who was hesitating to join the space, I don't know, last year, years before. professionals or entrepreneurs that wanted to do something new in their space. I think that right now is a great moment. And my key takeaway will be like go places, attend conferences, speak with people in the space. There's such a great culture. Everyone is contributing to this ecosystem and actually helping people to join different crypto companies or to start their own journey. So I would say my advice, I would say non-financial advice, is going to be to try to join the space, try to learn more things about fundamentals. And there are fundamentals established right now. Like there is a lot of utility, there is a lot of actual real world asset use cases that we see right now moving into crypto rails and blockchain infrastructure. So definitely my advice is going to be to establish more proper educational channels and onboard these people into the space.
Wonderful. Thank you so much for coming on the show and sharing your insights with us today.
Thank you, Amanda. Thanks for having me.
And thank you to our listeners. Share in the comments what was the most interesting to you. Do you have any questions? Put those in the comments. And until the next podcast, have a wonderful week.